cash sales of, excluding that, were made. All purchases are on credit terms, but I took advantage of early settlement discounts or bundle. Closing inventory, VAT, bank, receipts and payments recorded in the bank account include accounts from credit customers with amounts. Find them missing. Okay, so we might do another one of these. New, and we're gonna get that. Okay, find the missing discounts received figure by preparing the sales purchase control ledger control account for the year ended. And find the missing discounts received figure. Right, so the purchases ledger control. So purchases, so that is things we have bought which we need to pay for, trade payables. It's not a liability. So balance brought down is 18 to side. And then we are going to have balance carried down is going to be 498, I believe, if I'm understanding this correctly. So that is the value at the end. So we are going to have Alright, so we are going to have purchase debit is going to be 1580. Purchase returns is going to be over here. Purchase returns debit is going to be 758. Yeah, if it's a purchase, it's a liability. Return is going to reduce that. So that will be under the VAT. And that will be under purchases. purchases are going to here. Amounts from credit customers, amount to suppliers. So that's going to be bank. Bank. So a sale is when we sell something to a customer or purchase. We're buying something from suppliers, so amounts to suppliers. So it's money going out of the bank. So it's going to be on this side. 98,542. Find the missing discounts received figure. And we're gonna have discounts received be here. Oh, I need my calculator. 858. Find the missing discounts received figure by Baron. Okay, done that. But you will first need to calculate the VAT on the discount. You will first need to calculate the VAT on the discount. You calculate it in the purchase ledger control and enter this into the VAT control account below. Then you will need to find the closing balance on the VAT control account. It's not charged VAT on the rent that it pays. So VAT is a liability. Oh, that's fine. So VAT, it was a balance brought down. 2350. Okay, so sales. So when we have a sale, we have an item, we give it to a customer in exchange for money, so we have money coming into our bank account. We receive that, and we then need to pay it to the HMRC. Purchases, HMRC then owe us. So that is an asset, and that is a liability. So if we think about it in terms of this one here, the purchases daybook went on that side, then the purchases and that goes on that side, yeah. So we're gonna have purchases daybook. Purchase returns debit 293. have spent money, so that's purchases. We have spent money. Do you want to see that? Oh, it's us. So we've got general expenses. 6731. Yep, all of that, and that's recoverable. Right, 7250 times 1.2 minus 7250 is equal to 1450. The total bank was posted to the cash sales account. That's cash sales. So, liability, cash sales, 1450. We are going to have the sales debit. $37,248. And then the sales returns is going to be over there, which is 1,228. But we've got all of that VAT. General expenses VAT, cash sales VAT. Barring took advantage of early settlement discounts wherever possible, VAT has been correctly accounted for. Trade receivables. Okay, so if I now go to here, wages. There's no VAT on that, there's no VAT on drawings. Payment to HMRC for VAT. Okay, let me get this right. That is money owed. So this would be bank. $5,468. So we've already done general expenses. Rent paid, there's no VAT. A loan, there wouldn't be VAT on a loan. Amounts banked from cash, I've dealt with that. Okay, so that means you'll first need to calculate the VAT on the discount you calculated. The purchase ledger control. So we have got discount received. Right, so if I remind myself correctly, that's including VAT. Okay, so purchase returns. Purchase returns. So discounts received, that means discounts received will be over here. Because if we receive a discount, then we basically receive the money, so that means we then owe HMRC. So if it's £60, 120%. 60 divided by 1.2. So 50 times 0.2 is 10. So £10. Okay, first need to calculate the VAT of a discount. Then you need to find the closing balance on the VAT control at the year end. Balance carried down, so we have got 51351 minus 303557 minus 10994. We owe quite a lot of money. No, they owe us. Yeah, no, we owe them. Because it's gonna be down here. Sales. Okay, the totals recorded in the cash book for the year end 31st of March were alright, the bank was 8176. So we've got amounts from 8700 plus the totals recorded in the cash book. I feel like I'm missing something. Assuming there are no year-end adjustments, what will be the opening bank account balance in the general ledger? So the bank starts off with debit. So amounts from credit customers. So we've got 4210. Amounts to suppliers. So we've got amounts back from cash sales 8700. A loan receipt. So we've received a loan. We've paid rent. We've paid general expenses. Payment to HMRC for VAT. Drawings, we've taken out 20,000 and wages 475. The totals recorded in the cash book for the year end. So we've got 98542 8460 plus 40386 plus 5468. payments correct. 214, 227,410 minus 216,810 10,600. You do not understand. Have I missed something obvious? Use their numbers plus 216,810 minus 209,331. 15,655. New. Oh, cancel. Incomplete records and applying ethical principles from final accounts. Ooh. Right. Show whether the following is true or false. Net sales. Oh. Net sales margin percentage. We have got margin. What was the other one? Markup. Net sales margin percentage. So a markup. So you've got price is 100 plus 20%. So if we did the sales, sales margin, whereas this is I think so 100. sales margin percentage of 40%. Opening inventory. Sales 88900. Calculate the cost of goods sold. Net sales margin percentage. Oh wait, hang on. So if I'm doing this, if gross sales margin of 40%, so if we have got minus 533. Oh, so that's net profit. So you've got 88900 divided by 100 is equal to no, false. False, I think. So I think the cost of goods is, if the profit is meant to be 40%, times 0.4 should be net profit. So the cost of goods is 53,340. Calculate the value of closing inventory. That is easy. So we've got opening inventory, we have got purchases, so we've got plus 489 is equal to minus 53340. 8,016. You compare this figure with the results of physical inventory count at the year end. The total physical inventory value. The total physical inventory value is £520 higher than your calculation in part 2. The physical inventory value is higher, so we have got so it can't be that they took extra inventory. That's so it can't be that. A purchase invoice has not been recorded in the accounts. sales invoice has been paid twice in error. So it looks like we have sold more than we actually have. Yep. Update the value of closing inventory in light of the discovery above. 8580. The trader has credit agreements in place with all of his suppliers which allow him to make payments 2 months after the purchase is made. Which of the following is most likely to be the total on the purchase ledger? The trader has credit agreements in place with all of his suppliers. Which allow him to make payments 2 months after the purchase is made. Which of the following is most likely to be the total on the purchase? Okay, so that's divided by 12 is equal times by 2. I'm gonna go with that one because it's for the entire year, so we shouldn't have an entire year worth outstanding. And yeah, we shouldn't have that much either. The client has rung your office and asked to speak to you. He informs you that he is going to a meeting. These accounts to show a very positive picture, otherwise he is concerned that the bank may withdraw his overdraft facility. Suggest that by increasing the closing inventory figure further. Nope. Yeah. How many sections? Let's go section 3. We've got section 4, section 5, section 6. Oh, blimey. Okay. I think. Right, section 3. Okay. This section is about final accounts for sole traders. You're the following information about events on the 1st of January 2017. A sole trader started business. The business is not registered for VAT. The sole trader transferred 20,000 of his own money into a business bank account. So we're gonna have 20,000. The bank also provided a £5,000 loan to the business. That is not capital. That is a loan. The trader then used 1,800 of this money for IT equipment that he needed to start the business. 1,800 of this money for IT equipment he needed to start the business. Nope. 450 of goods for resale were purchased. Nope. Supplier allowed 2 weeks of credit. Complete the capital account as at the 1st of January 2017 to include the accounts. I feel like I'm missing something here. Because the capital won't be affected. Am I missing something? Okay, so we have 2,000, 3,000 capital. The bank has provided a 5,000 loan to the business. So we've got 5,000 and we've got 5,000. The trader then used 1,800 of this money for IT equipment he needed to start the business. So that's basically 1,800. It's gone from being an asset to an asset. 450 of goods for resale were purchased. 2 weeks of credit. So we're basically gonna have no, I'm right. You're now working on the it's just a trick question. Now working on the final accounts of another sole trader, Prickles. You are to prepare the statement of financial position for Prickles as of the 31st of March 2017. It's below. $21,978 has been recorded Prickles as a policy showing trade receivables net of any allowance for doubtful debts. Calculate the value of trade receivables that will appear in the statement of financial position. Okay. Oh, that's a lot. Okay, so we are going to do and then we're going to do prepayments. So we're going to have, yeah, we're going to have purchases. Okay, so we've got Prickles as a positive showing trade receivables. Minus $950. So the allowance for doubtful debts. Trade receivables. Trade payables is purchases. Trade receivables is sales. Sales. Ledger control. So ledger control 8695 minus 950 is equal to 8695 minus 950. 7745. 7745. Prepare the statement of financial position for Brickles as of. Do not use brackets, minus signs, or dashes. Okay, so we have got. We are going to make this so it's sidey by sidey. Okay. Statement of financial position. So we don't want expenses. We don't want expenses. We don't want that. We don't want bank charges. Capital. Closing inventory. We don't want that one. Depreciation charges. We don't want that one. I don't think we want that one. Drawings are going to cost. Opening inventory. We don't want that. We don't want payroll expenses. We don't want purchases. We don't want rent. We don't want sales. We don't want sales returns. Sales ledger control account. Okay. So we have got equipment. 38450. Equipment at cost. We then have got 19682. Carry amount. So we've got the 38450 minus 19682. 18768. That's too far. Okay, so our current assets, we've got inventory. Closing inventory is 34956. Closing inventory. We're gonna have trade receivables. We are gonna have 745. So that is the allowance for doubtful debts and the sales ledger control. Prepayments. We are gonna have prepayments. 241. We are gonna then have bank. 5765. 707 minus 19597 is equal to 29110. And we've got 18768 plus answer is 47878. Opening capital. We have got capital. Where's capital? 42800. Capital. Add profit for the year. Deduct drawings. 16900. What was the profit? 21,978. 42800 plus 21,978 minus 16,900 is 47878. Yes. Complete the following. The item in the trial balance allowance for doubtful debts adjustment is a credit entry. Allowance for doubtful debts adjustment. This represents a decrease in the allowance for doubtful debts balance. Yeah. This section, knowledge and understanding underpinning financial accounts preparation, include the following tasks. Which one of the lists below is a benefit of running a business as a limited company? Reduce administrative burden on the owner. Limited liability for owners. A partnership which does not have a partnership agreement in place will be bound by the Partnership Act 1890. Which of the following businesses must submit their annual accounts to Companies House? Nope. Nope. I think it's 3 and 4. Which of these bodies register and regulate charities in England and Wales? The Charities Oversight Board, the Association of Charitable Causes, the Charity League, the Charity Commission. Which one of the following provides guidance on the correct accounting treatment of property, plant and equipment? That, because that's inventory, and that is something else. For each of the reasons for having an interest in the information contained in the file. Assessment of the security of a loan made to the organisation. I would say the banks. Assessment of the likely future economic sustainability of the organisation when deciding whether to extend credit terms to it. That would be a supplier. This section is about accounting for partnerships. Task here, which one of the following would not normally be included in a partnership agreement? The rate at which interest is to be paid on, the salary which is to be paid to employees. You have the following information about a partnership business. Andy, Barbara and Colin have been its owners for several years. On the 31st of March 2017, Andy retired from the partnership. Goodwill was valued at 96,000, but has not yet been entered into the accounting records. The profit share ratio before Andy's retirement was is it capital or is it current account? share ratio after the retirement became, so Barbara, um, 96000 times 0.6 57600 96000 minus 38. Yeah. Because for the capital account you add the capital before and subtract the capital after, so he adds reduction in their capital. Yeah. The following information about another partnership business. The partners are Louise and Laura. The financial year ends on the 31st of... Okay, you know what we're going to do? We are going to go over here, go new. Right. Lisa and Laura, the financial year ends on 31st January. There's no interest on capital or drawings figures at the year end. Salary entitlement per month. Sales commission earned during the year. Drawings. 1, 2, 3, 4. Right, so we are going to have the salaries. I don't think drawings come into it. Hi. Hi. Sales commission earned during the year. I think that would come out. Yeah, because drawings appears on the... Are you helping? Oh, you stink. Why do you smell so bad? Oh, Pussycat. Pussycat. You really smell really bad. Did you just like fart or something? Stinky cat, honestly. Oh, you happy Pussycat. Oh, you happy Pussycat. You happy Pussycat. Soupy. You're not actually helping. And then Laura is 1600 times 12 is equal to sales commission earned during the year 6400 120 minus 144 19200 minus 6400 77900 times 0.323 370. And if we've got 77900 times 0.754530 plus 23370. Alright, Brisket, you're kind of in the way. This section is about final accounts for a partnership and introduction to reporting regulations for a limited company. Profit or loss for me and Ace, a partnership for the year ending 31st of share profit losses on major sector and their only entitlement to profit. Hiya, you should be at the trial balance below. All necessary year-end adjustments have been made, except for the transfer of profit or loss to the current accounts. Of the partners. Okay. So I want to come up here and do and then this one's gonna be new. Oh, I have to scroll down first. Purchases. So you've got prepayments, so purchases. Deduction of an account balance used to make up cost of goods sold. A loss for the year. Okay. Alright, so we don't need that. We don't need that. We don't need that. We don't need that. Or 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 that. Okay. So we've got sales. 49683. We then have got opening inventory. Opening inventory is 580. We then have purchases. Purchases is 33. 546. 33. 546. So we've got 45801 33546 minus 39 is equal to 34,168 49,683 minus 34,168 15,515. Add allowance is 80. We've got closing inventory. So we've got depreciation charge, loan interest paid, office expenses, payroll expenses, rent, selling expenses. Okay, so we've got depreciation charge 589. 60. Office expenses 2,000. 654. Rent. Selling expenses 589 plus